Hi there, today I'll show you how I find and research dividend stocks and how you can do the same with 6 simple steps. Hi, I'm Tom from the Dividend Attitude. Wouldn't it be cool if all the dividend stocks we picked would be winners and our dividend portfolio would be full of dividend stocks that will never cut their dividends? Well, that is probably not going to be the case. You can still do a lot to prevent yourself from picking bad stocks, whatever that might mean to you. Researching a company is like peeling off an onion. Layer by layer you will get a better understanding of the company. Most of us are probably not professional analysts, so how can we peel off that onion efficiently? The first step is to generate IDs and find dividend stocks. Sounds easy enough, right? But with so many stocks out there, where do you even begin? A great way to start as a dividend investor is to look into what is called the Champions, Contenders and Challengers list. This great research contains all US dividend stocks that have raised their dividends for at least 5 years. As a dividend growth investor, I absolutely love this list, because it saves you so much time on weeding out the stocks that don't meet the simple criterion of at least 5 years of consecutive dividend growth. And what I also did when I first started out is to simply look around. What products am I using? Online as well as in the house. Open your wallet. What are you likely to see there? A Visa or a MasterCard credit card, for example. Look it up in the aforementioned list. Don't worry, I will put a link on the list in the description. Nowadays I like to use the list of Dividend Radar, because that list is updated every week. The list contains so much good stuff like the industry, number of years of consecutive dividend growth rates, the yield, obviously this fluctuates, valuation metrics, and even if it is at fair value or not. Absolutely golden stuff. Now that you know where to find dividend stocks and generate IDs, we still have a problem. How do we narrow down this still enormous list of dividend stocks? Simple, we use filters. But what to filter for? There's a trade-off between using too strict filters, where you might miss otherwise good companies, and too wide filters, where you still end up with too many results. Anyways, I like companies with a good return on equity, more than 10%, in general at least 5% of dividend growth, a decent yield, 3% preferably, and lowish debt. And I like my stocks undervalued, and my stake medium. But I can't really use that last one as a stock filter, I guess. So I just simply create a filter for that in Google Sheets, or good old Excel. And boom! I have just filtered through 700 plus companies and narrowed it down to about 30 companies, worth doing further research on. Perhaps you already know which sector you want to add a stock to, so you can narrow it down even further. If you liked the video so far, don't forget to crush that like button and make it turn blue. If you enjoy videos like this, consider subscribing. Great, now you have a narrowed down list of dividend stocks, hopefully. So should we just buy those? If you want your dividend portfolio to lose all of its value, this is definitely the way to go. So what should you do then? Easy, research them. Or maybe not. You might be wondering, how and where do we research these dividend stocks? Let me show you. What I like to do next is go over to Seeking Alpha. Type in the ticker, have a quick look at the price performance on the summary tab, and then go straight over to the dividends tab. I am a dividend growth investor after all. Instantly you can see the annual dividends, dividend yield, the payout ratio. Now I discovered that the dividend history is not always accurate. So I like to double check that with the numbers in the list of Dividend Radar from the first tab. If I like what I see, I go over to the dividend growth tab to see what the dividend growth rates look like. A little tip here, if the 10-year dividend growth rate is higher than the 5-year dividend growth rate and the 5-year rate is higher than the 3-year rate, etc., that is not a good sign. It means the dividend growth rate is obviously slowing down. The previous dividend growth rates are not sustainable for the company. A way to value a company is by using the dividend yield theory. More on that later. But the dividend yield tab is the perfect way to get a first glimpse at the current value compared to the historical value. Is the yield higher than the 4-year average, then it could be undervalued. Now there are a lot of different websites where you can find this kind of information, but I just prefer to go to Seeking Alpha because it has a lot of information I need. In the last step we had a helicopter view of the company. Should be sufficient information to just stick our money in if we are satisfied, right? I mean, by now the money is burning in your pocket. Let's go, let's hit that buy button. Not quite yet. There are a few more important steps before we can really make a decision, including the one coming up now. I go to the key ratios tab first. There's a nice little export to Excel button here. So I download the Excel file and then open it in Google Sheets, because I don't have Excel. I hope Bill doesn't hear this, but I guess he will be fine even without my monies. Yes, I'm aware he's not the CEO of Microsoft anymore for a while already. On to Google Sheets. What do you need to look for in this myriad of information? First, I like to look at the trends of the revenue, net income, debt to equity, free cash flow, and the return on equity and return on capital. I check revenue, free cash flow, and net income if the long-term trend is up, and debt to equity and return on equity plus capital if they are stable and in the case of debt, not increasing. The gross margin and operating margins are other important metrics I like to check. But what do these even mean if there is no context? That is why I like to compare these metrics with competitors. If I see anything out of the ordinary here, I check out the actual income statements, balance sheet and cash flow statements. Remember those, they are important when analyzing a company. Personally, I can completely geek out here and go through the income statements, balance sheet and cash flow statements of multiple years. If you really want to know a company on a fundamental level, that is the way to go. But to keep the video on point, I will not do that now. If you do want to know how to do this, keep watching, because I will recommend some videos at the end. We now know a lot of financial number stuff about the company, but we still don't know anything about the company itself. So in step 5 I turn the company website upside down. Well, actually mostly the investor relations page. It would actually make perfect sense to do this step first, but I always like to analyze the company first on its financial and dividend fundamentals before I head over to the company website. Some investor relations pages hold some real gold nuggets, besides the annual reports obviously. Take waste management. When I was doing research on this company for my Battle of the Garbage Stocks, I found a page called WM101, where they explain the revenue breakdown, the industry and much more. Now comes the next step, going through annual and quarterly reports. But here is the problem, how are we going to do that? Those annual reports are often 100 pages long. That is going to take hours and hours and you will probably fall asleep in the middle of reading. Let me show you how you can do it quicker and more efficiently. It is important to go through these reports with a goal in mind. What is it that we are looking for? What I want to find out is, does the company have a sustainable competitive advantage or a moat? Is the company led by a quality management team? What is the company all about? What is their business model or how do they actually make money? Honestly, when I first started I thought annual reports were long and boring. But once you learn how to sift through annual reports and what to look for, it is really exciting to connect the dots from the financial information you found before to the company, and it is a chance to get a look inside the inner workings of the company. Take the time when I was analyzing Visa and dove into their annual report. I would need a whole truck to take out all the gold nuggets. Okay, maybe I've been saying gold nuggets a little bit too much. Visa breaks down how they make money, their future plans and so on. Or the time I was analyzing realty income for my battle video with Store Capital. And later, the full analysis on realty income. During these difficult times where REITs such as realty income and Store Capital both have tenants that are suffering a lot, it is all the more important to know and understand how much they are affected. So when I went through the quarterly reports of both realty income and Store Capital, it was very convenient to find precise information on their portfolio diversification, list of top tenants, how much rent was collected from contractual rent and so forth. The business of REITs is to lease out real estate to tenants, so that kind of information is absolutely vital. So the real question is how to get through those reports faster. My favorite parts to check in an annual report are first the letter to shareholders, which is at the very beginning. After that I check the part called business, where a company describes its business and risk factors. Management discussion and analysis is absolutely vital for me to check as well, because you will learn how the management has interpreted the results of that year. If you made any notes earlier to check why certain numbers were off, obviously check that as well. And now you know how to find and research dividend stocks by yourself. Now hold on, we are not there yet. If like me, you like to buy dividend stocks when they are on sale, we have one last hurdle to get over. How do we know if a stock is on sale or not? I could and have dedicated entire videos on this, but let me quickly show you a few ways to do this. Check the top right for a playlist with videos on the different methods. I always use multiple methods to come up with an estimate to decide if a dividend stock is on sale or not, because we are using estimates and the value of a stock is based on those estimates. I want to know if the estimated value of the dividend stock is close with other methods or not. My favorite website to quickly check if a company is on sale or not is Fastgraphs. The black line is the price, the blue line is the historical market average, and the orange line is the fair value estimate. If a dividend stock has a steady and longer dividend track record, I also like to use the dividend yield theory to see if a stock is on sale or not. Is the current yield below the 4 or 5 year average yield, then it might be on sale. I also like to check out a website called Finbox to see what their estimates on the fair value are. The cool thing is that Finbox itself also uses different methods combined into one to come up with that fair value. You can also use methods such as the discounted cash flow model and the Gordon Growth model. If you want to know how to use those, I also made videos on both of these methods. So now you know how to find and research dividend stocks and how you can find out if a dividend stock is on sale. Good luck and have fun on your investment journey. Until next time, bye bye.